Hey everybody, welcome to your weekend review for the week of Monday, June 20th, 2023. On Monday, the markets were closed in celebration of Juneteenth. For those that don't know what that is, it's celebrated on June 19th, which is the anniversary of the announcement of General Order Number 3 by Union General Gordon Granger on June 19th, 1865 in Galveston, Texas. The order proclaimed that all enslaved people in Texas were free more than 2.5 years after the Emancipation Proclamation was signed by President Abraham Lincoln, which was widely held as the last order that was still allowing for slavery and wasn't enforcing slavery. Which brings us to Tuesday, the 21st. MBS were up 5 basis points early. Stocks lost 20 points in the morning. The new residential construction report, the source of starts and permits above or below, almost never accounts for a reaction in the financial markets. This morning is proving to be the exception due to its uncommonly large beat, and everybody's really looking at the tea leaves trying to get ahead of the Fed's predictions. Housing starts came in at 1.631 million on a 1.4 million forecast. It was 1.401 previously. Building permits came in at 1.491 million on a 1.42 million forecast, 1.417 previously. This number was 5.2% above April, but still 12.7% below May of 2022. The street was looking for 1.4 million. This sold it up, so this is a pretty big upside surprise. Both multifamily, 5+ units, and single family saw big increases. Building permits rose to 1.49 million. Today and this week doesn't have a lot of economic data. Housing data is important, but doesn't usually affect rates, but does have a lot of Fed speakers. There has been a clear shift after this last week's Fed meeting that markets are now taking the Fed seriously. The rates will stay at these levels longer, and markets are now pricing in the probability that there will be a year-end Fed fund rate at 5.25, meaning markets are pricing in a July rate hike and then a hold. Right out the gate this morning, bonds responded to the massive beat in the housing starts. We almost never see housing-related economic stuff driving bond market this heavily. There was a little credit to other 9:30 a.m. open and political headlines. Either way, MBS hovered within an eighth of a point of unchanged, but rates were nicely lower versus Friday. And the next 2 days bring congressional testimony from Fed Chair Powell. At the end of the day, we are down 2 basis points. Stocks lost 20.88, which was pretty much the same as in the morning. At the end of the day, we are on the MBS. We are at 100.06, which puts us in this range bounded by the 50-day moving average and the 200-day moving average right around 100.318 and 100.4, and then we have two floors being the 25-day moving average and the Fibonacci at 99.845. The improvement in construction is good news for the mortgage business, and Goldman is out there with a positive call on a couple of mortgage-related companies, AGNC Investment and Rhythm Capital. AGNC is a mortgage REIT that invests in spec pools, while Rhythm is New Res Caliber and Shellpoint. The bull case for AGNC is based on narrowing MBS spreads, which is a function of interest rate volatility. The ICE Move Index, which is sort of like a VIX or volatility exchange for bonds, is at the bottom of its tightening cycle range. The lower it goes, the more attractive MBS are against Treasuries. We also got a post from our sponsor at wellthatmakesense.com, so this is something that's actually under your control. So this talks about most distractions come dressed as easy opportunities. So entrepreneurs are often rewarded by changing directions. Nothing works, change directions again. Nothing works, change directions again. Then something clicks, so they think, oh, when I change direction, good things happen, but that's not really the case. So check it out on www.wellthatmakesense.com.